Welcome back, investors. Ticker Time News. I'm Adam. Thank you for joining me for the After Hour Show. Remember, this show is for you. So if you have a question, leave your ticker symbol and your question in the comments. We'll go over it live during the show. Okay, now let's just right into it. All right, here we are on our third green day. Right, we are in a snapback rally after a death cross. This has occurred multiple times on the S&P 500 over the last several years. We hit a death cross and we get a snapback rally. We are in the midst of that. We are almost to the end of that snapback rally. If we look here on the chart, I'm going to hide volume for just a moment so we can drill in here a little tighter and see what I'm talking about. This is the daily view on the chart. We've had these lines drawn for weeks now. Here was the death cross right here on the 14th of March. That was our bottom. That was what we would call a triple bottom here. We had a super low on February the 24th. That was the low so far. And then we had two other lows here. Now, if we actually draw a trend line here on these lows, from this bottom to this bottom, okay, and then I'm going to put another one going from here. I want to get right there on it, up to this one right here, that third bottom. What did we just do with those three bottoms? We are making higher highs on the S&P 500. We get a death cross. A death cross is a lagging indicator, meaning that the market has already been in a downtrend when the death cross occurs. What is the third sign here? These are all things that you should be looking at on your chart to determine when you should step back into the market or add shares. Here's another important area. If I measure from this death cross right here on the 14th down to where price action is on the 14th, okay? Oh, I gotta, hold on. Here we go. We come down here to the price action on the 14th, and what do we have? We have about a 7% drawdown from the death cross to where price was at the close on the 14th when the death cross occurred. Was about a 7% difference, right? The market was 7% below that point. Now, another thing to notice is from the high up here, where were we? How far down were we on the 14th? We had dropped 13.5%. These are all clues. These are all clues. I'm going to go back in a little tighter on this. These are all clues that we can use on the chart to let us know that, hold on, conditions are about to change, right? When we had this February 24th low, we rebounded immediately, same day snapback. And then we rallied for 2 more days. The third day, not really much of a rally, okay? Even though the candle is green, technically we were down 0.2% on this one. We opened at 43.54 and we closed at 43.73, but then we dropped in the after hours, which technically counts the following day. But it's just how the chart reads. It shows us at a loss of 0.24%, even though it is a green candle and it closed above where it opened. It's just something tricky there on the chart. But then we had a red candle, green, red, and we sunk. We hit our second low here, but it was a higher low. It didn't get down as far as the 24th here on the 8th. And then our third one was on the 14th at the death cross. Everybody thought death cross means bad, we need to sell. So that's what happened. but we didn't go down as far as we did on the 8th of March and on the 24th of February. And now we are in a snapback rally, and we are going all the way to 4470 on the S&P 500. I called this right here, March 15th, March 16th. I said we are going to 4470 on the S&P 500. It may take a few days, and it could possibly take a few weeks. I thought this morning's slow start was an indicator that maybe this snapback rally is going to be a little slower, because remember, what's different this time around than all the other death crosses over the past 5, 6 years, 8 years, 10 years? The wild card is we are in wartime. Russia invading Ukraine. We are in war. That is the wild card that makes things different. But we're still in a rally. Today's the third day, straight day of it. Nice gains, nice big gains. Today did start off a little slow, but we're going to 4470 on the S&P 500. And the reason that I'm calling 4470 is where we're headed to, is because of all of the snapbacks before. What has been something consistent, the same about them? They all bounced back to this level where the cross occurred. Okay. Link in the description for my um, death cross video. Watch it, get a better understanding of what I'm talking about here with this death cross. But so far, it's a lagging indicator. It means we've already been in a downtrend. A bottom is near, a reversal is near too. And that's what we're at right now. We are in a reversal, and we are going up here to 4470, and we closed at 4411. So we're not that far away. One more green day, and we will be at 4470. One more. That's it. One more day. A 4-day rally got us from this bottom on March 14th, day of the death cross, a 4-day rally to 4470. That could be what's in the cards. We only really need one more strong day. Today was a little weaker. We weren't growing by 2% in the S&P. We were up 1.2% instead of 2.2 or 2.4. But that's okay. It's all right. And it's okay if we have a red day too. It doesn't mean that I don't think we're not going to that level on the S&P 500. Okay. Okay, so let's just get into it. Thoughts on Bros? Good question. Great question. BROS, which is Dutch Bros. I like the company. They have a very aggressive land and expand strategy happening right now. They have over 500 stores, or shops as they call them. Their goal over the next several years is to get to 4,000 shops. That's incredible growth, and it'll take them some time to get there. It's over a several year period, but that's where they want to be. 4,000 shops from, over 500 and some right now. So that is a very big jump. It's a very bold, ambitious plan. I think they can do it. I think leadership is good enough that they can achieve this if they want to. Right now, they are becoming range bound. And with this range, they are in the top of the range right now. The top of the range is somewhere around $55 all the way up to $60. That seems to be the top of the range. So if we're looking for Dutch Bros to break above this top range here, what we want to see, and I'll bring it in here, what we want to see is we want it to come up to the $60 area right here, and we want to see it touch this and then break through it and close above it. That's the important thing. If Dutch Bros is going to stay up here and keep this momentum from this 3-day rally here, or you can actually go back here to March the 3rd, if you want to, just 2 red days in between there and today. So really, that's not that bad. You could really go back even further to February the 24th when it hit its low here. It has been making higher lows, and we can trend line that out to show that. So we go from here to here. Those are higher lows, and then of course an accelerated push up like this. But what we want to see is Dutch Bros close above that $60 price point. If it closes above that $60 price point, then it may have enough momentum to push it even higher, but I don't think that that's going to be the case. I think it'll get to 60, maybe, and then it's going to have a reversal and it's going to come back down. And the bottom of their trend is right here between $45 down to $40. That seems to be the bottom area where it's bottoming out. Okay. So you can see it here on the chart going all the way back here to November 2021 when it first entered this range here. And you can see it, it's just up and down, up and down, up and down in this range. And I believe they'll continue going, moving sideways for several months. So you may be able to even trade this one when it's in its ranges, right? Sell it when it gets above 55, buy it when it gets below 45, and just continue, rinse and repeat. If it continues to move sideways, which it seems like it's going to do. So Dutch Bros, a good company. They have a very aggressive plan moving forward. On the stock chart, they are at the top of their range right now. They can still go a little higher, maybe to $60. And if they're going to break above, and let me bring the volume back in here on this chart. If they're going to break above that 60, they have to close above $60 a share and hold that footing, right? In order to take that resistance and then transition it to support, they have to close above it, hold above it, and stay above it, which is a challenge. The last several times would be back here, February 1st through February 10th. It tried. It would get up there and get rejected. On February 7th, it did break through. It got to $63.20, but it didn't close up there. It closed down here at 56.35. And then you can see here on February the 9th, it tried to break through there again, but it couldn't. So it's a really strong resistance area that will probably send it drifting back down to the bottom of its range here. And if we look at the volume here, quite frankly, volume is a little on the light side compared to where it was when it was trying to push above 60 right here at the beginning of February. Volume is a little bit higher there. Let's see, the average would be about 2.6 million, where now the average is 1.8 million. So if it doesn't have that volume, it's not going to have enough momentum to push above that $60 area either. So thank you. I'm actually in puts, just entered end of day. Was going to wait for tomorrow and enter, but start a position. Cool. Very good. Awesome. Awesome. Very good. So looks like you're seeing the same thing here on the chart that that I'm seeing here. The RSI here is at a 56 at the close of today. It kind of it peaked up again, peaked its head up. It's not at the top of its range as far as the relative strength index. The range on that is up about a 67. So it still has a few more points to go before it gets to the top of its RSI range. which could again put it right around that 60 area before it drifts back down. Same here, same thing with the money flow. It's at a 61, and it likes to go up to 74-ish, 73, that area before it comes back down. So, okay, cool. Anything else you want to talk about? We certainly can. Just let me know in the comments, and we'll go over it. All right, let's see here. Oh, yep, the market today. All right, so we could get to our goal of 4470 on the S&P 500. All we need is one more good day. We are right now, end of day, to 4470, and we are exactly 1.36% away. We did 1.2% today, 1.36% tomorrow, and we're done. We've reached our target for the S&P 500 for this snapback rally. Now, the big question is going to be what happens after that, right? Is the market going to continue to go higher, or is this going to be like a resistance area and send the market back down? Well, over the past several death cross, once it has reached this the cross area here, the market has stopped. The market has slowed down, uh, even declined a little bit from this point, but it not by much. It's not like a big crater back down to, you know, into the 4100s or the into 40 and some change on the S&P. But it does hit the brakes once it reaches that cross area. At least the past several years, whenever this death cross has occurred, that's what's happened. Okay, so today in the market, the stocks obviously they closed higher for the third straight session after recovering from what looked like today was going to be a red day. This morning was a little bit on the weaker side. There was some risk off in the market. Investors continued to digest, of course, the big news from the Federal Reserve yesterday and the latest signal of possibly 6 interest rate hikes this year following yesterday's 25 basis point increase. Mortgage rates actually broke above 4% today for the first time since 28 no. I can't remember the year off the top of my head. I'll look it up in just a moment. But keep an eye on volatility in the commodities prices because the Kremlin, a spokesperson from the Kremlin, said that the reports of significant progress in Ukraine peace talks were, quote, wrong and didn't happen. So we had that deep fake today from Ukraine president saying, withdraw, put down your arms, surrender, something like that. Crazy deep fake. These things are incredible. But the Dow Jones did add over 400 points today at the close. It was at a 1-month high today when it closed. The S&P, as we've been talking about, up 1.2%. The Nasdaq was up 1.3. The Russell 2000 1.7. So really good. And all 11 S&P 500 sectors, they did close in positive territory. The energy sector was up 3.5%. That was the big leader amid about an 8 to 9% jump in crude oil prices as the International Energy Agency issued warnings of Russian oil supply shortages due in next month. Now, Devon Energy, that was up 9.6. Diamondback Energy up 6.6. They were among some of the biggest gainers in the energy sector. Now, stocks appeared to key off the price action in the 10-year Treasury note, which settled unchanged at 2.19% after dipping below 2.11% over the night, right? Now, the ability for the 10-year yield to move higher, undoing some of yesterday's, we'll call it curve flattening activity, seem to alleviate some of the underlying growth concerns in the market. Now, we also got February housing starts. That was up 6.8% month over month to a 16-year high. That's good. We need homes. Now, single family units was up 5.7%, and that drove the strength in the housing starts. But there was a 0.5% decline in permits for single units. Okay. There were starts and there were permits today. Starts is when the house is being built, it has started being built. Permit is the house has not been built yet. They're just getting permits ready to build the house. So, permits are a leading indicator of housing starts. Permits were down a 0.5%. So that's a bit of a leading indicator that maybe because of the war, inflation, and so forth, supply chains, labor, you name it, you got it. We could be seeing housing maybe slow down this next month for March. So uh, keep an eye out for that as well. That did kind of temper some of the enthusiasm for an otherwise very encouraging February number. Now, investors will get existing home sales for February on Friday of this week. So we'll keep an eye out for that. DE broke out today, BRKB, new highs. All right. I do like Deere. They have been on a very strong rally. Look at this from earnings here. Um, I hold Deere. I like Deere as a company. I think they're definitely going to transition to electric stuff, uh, motors. But look at this from the February 24th bottom. That, ladies and gentlemen, that was the day to buy, February the 24th. And it has been on a very strong rally since then. But notice, okay, we've got our Bollinger Bands on here, which is what these earthworm looking things are that are on the bottom and top of the price action, these blue lines, right? These are our Bollinger Bands, and they kind of show you where things are headed and where resistance could be. And we're right here at the top of the Bollinger Band. Now, that's not to say it can't continue up. Look back here on January the 4th all the way through January 11th, right? It rode and pushed the Bollinger Band almost straight up here in this extended rally. So we can see a rally push these bands higher. But a lot of times when we reach the top like this, especially when there's been a peak of several times, like right here at the beginning of February, where Deere peaked, although that was going right into earnings, and that was right before the big pullback in the market, I think Deere might be a bit stretched right now. And maybe it wants to come back down here to this 395 area, $400 area, maybe in there somewhere. And if we go to the bigger picture of Deere, we can see that it too has been range bound going all the way back to over a year ago, February of 2021. And it's just been in this up and down pattern in this range, not really breaking out of it. So right now, for Deere, this is the biggest breakout above that in the past year. That's a good sign. That's a really good sign. This is like what we'd want to see for Dutch Bros. If it's going to break that $60 area and then hold it. So Deere today, it has closed above this line here at 395. And if it can hold above this, then maybe Deere is going to go to another leg higher. and start using this resistance line here as support. It's a good possibility it could do that. Maybe turn $400 into its support area and then break higher and then maybe move sideways for a while, like this extremely huge rally that Deere went through here back in the 2020s before it started to move sideways. And then if we go back before that into 2019, 2018, it was a sideways move again for Deere. So Deere seems to have these patterns where it likes to move sideways and then move up. So I mean, we could make a box right here, showing how it was moving sideways, right, up until this point. We could probably say. And then we had the whole COVID and the shakeout there. But then we would pick back up where we left off at these highs right here. And then we had this really nice rally going all the way up until we got to the top of our range there and then started moving sideways again. So this is something that Deere likes to do. And then, of course, leading into that sideways pattern, we had this rally, right? Move sideways, the COVID shakeup, and a rally, and then move sideways. So we see the pattern. It's clear as day. That's what I'd kind of expect from Deere. Maybe we can get a rally now and a leg up and get out of this sideways pattern that we've been in here on the chart for Deere. So that's something I'd be watching for. And Berkshire, it always does good. I mean, look at this. Even when we had the pullback here, I just want to measure that right quick. Its biggest pullback right here was 7.6%. But it didn't close on that day. It actually closed up here. So its biggest pullback close to close would be 6.1%. And year to date, it is in the green, I believe. Yeah, 15.8%. While the S&P is still in the red, the Dow is still in the red, and so forth. So it's performing really, really good. The one thing I would say about its performance here, and I don't know, I like to use history. I know history doesn't repeat itself, but history does rhyme. And I just like to look at these chart patterns here. The last time we had a real run up like this, where it was stretched like this, we'd have to go, I think, back here to March of 2021. And even though that was right there after an earnings miss, and then we had the sell-off before it rallied again, it is possible that we run up here a little bit more, but then we're going to have to pull back some as traders take their profits and so forth, and just have a normal pullback and then continue moving on. But yeah. Um, So yeah, Berkshire's great. It's good, and it's definitely in a very strong uptrend right now. And if you look down here at the money flow plus RSI index, it is actually it's flashing a sell signal right here for Berkshire Hathaway, but it's been doing so going all the way back to what would we call this? February the 28th. So you would have missed all of these extra gains if we would have followed this chart box down there. But anyways, it's real strong right now. The rally's really strong. If we look at the RSI though, there is a bit of a pattern here. Whenever it gets this extended, right now it's at a 74 on the RSI. When it gets that high, I mean, we can go back here to January the 10th when RSI was that high, and that would put us right before the sell-off occurred. right after January the 10th. So when it does get that high on the RSI, it does seem to sell off a bit. The next one would have been right here on December 16th, right before the sell-off. But the sell-offs, they're not huge by any means. They're your typical pullback when things get a little hot. Nothing to be concerned about. So just pointing that out. Um, Sweet Green, that's a good one. I like Sweet Green as a company. I do think that Sweet Green, though, is a niche company. I don't think that it's got a lot of huge mainstream like McDonald's type of movement, but it's got its category that it's in, fresh salads and so forth. Maybe they could partner with a McDonald's to get salads back in McDonald's. But yeah, they have been on a strong run. Did miss earnings here, but I do like the company. I do think they are stretched right now. I know we don't have much history here on their on the stock chart here to really uh, judge it by or gauge it by. But I do like the company long term. I do think the valuation is a bit stretched right now, and I think a pullback is necessary and is due for one. But definitely Sweet Green, a great company. Again, I think it's a niche company. I don't think it's going to have humongous mainstream success, but it will find its pockets of success in different regions, different parts of the U.S. And if it could expand, especially maybe into Canada or Mexico, or maybe even I don't know. They haven't talked about doing anything like this, but maybe they could have, well, shipping fresh greens and stuff. It's a little difficult. Well, that was just a throwaway thought that I was just having about them. Yeah. So Sweet Green looks good, but again, I think it's a little bit overextended on the chart. But we don't have a lot of history to go on here, so I'm just going to look at the valuation. The market cap here, 3.98, almost $4 billion market cap. I think that's a bit stretched for where the company is right now, and is due for a pullback. Um, awesome questions. I greatly appreciate them, Manny. I love them. Keep them coming if you have any more. Um, as far as how we stand year to date, the Dow Jones is down 5.1% year to date, so it's slowly pulling back up to that break-even point. The S&P 500 is now down 7.4% year to date. Again, it is marching straight towards that break-even point for the year. The Russell 2000 still in third place, down 8% year to date, and the Nasdaq is still in correction territory, down 13% year to date. But again, it is slowly marching back to get above that correction territory. A lot of the technology companies have seen a big bounce over the past couple of days. They're probably going to see a slowdown within the next, if not, by Friday, maybe Monday, Tuesday next week, maybe a little slowdown before continuation for the tech sector. Because valuations, I believe, got really, really heated and really high in the tech sector. All right, let's see here. Bro seems way too high out of market cap compared to, yeah. Um, does Krispy Kreme? Krispy Kreme does coffee, right? Yeah, Krispy Kreme does coffee. Um, I love Krispy Kreme donuts. They're so good. Um, they went public again last year. They were a public company before. It's definitely a company that's been around for a while, and it finds its pockets again, kind of like Sweet Green, but on the opposite end of the spectrum here. Sweet Green is is healthy and good for you. And Krispy Kreme is a treat, a delight, uh, full of sugar, but delicious. Can not complain about that at all. Um, yeah, the valuation for Krispy Kreme being at $2.4 billion here, I think is okay for it. You can see though, it's since going public, the stock hasn't been able to find footing yet. It hasn't really built up a base yet either. Although I think that base is kind of being built right now. Um, I haven't put any lines really on the chart here, but I think I could go ahead and say that probably around, well, probably around 1325. We could probably put a line there for a bottom that's forming. And if we go back here and let me just look at this. This was October uh, 2021. It broke below it. It got down to 1265. This one here, right after earnings, after it went public, this was August 2021. It was down about 1284. So yeah, this 1325 seems like it could be a low. Let me just take volume away for a moment. And then it looks like we're marching to a high, maybe 1550, 1525. Yeah, 1525. And you can see there going back to when it slipped into this range on January 20th. While the market has been fluctuating so bad during this time, Krispy Kreme, you can see it here perfectly, has just been moving sideways, being range bound, and did good on revenue, but missed there by a penny on earnings, EPS. So they're bringing in some money. Okay. Let's see here. Dutch Bros versus Krispy Kreme. I would pick Dutch Bros over Krispy Kreme. Um, I don't think Krispy Kreme has a expansion that is as aggressive as Dutch Bros, and I think that aggressive expansion by Dutch Bros uh, is going to be a huge driver uh, for the company. Obviously, because they are going to be accelerating and aggressively trying to grow their company. I think it's going to eat up a lot of money to do that, but it will be a reward that will be paid off in the future. Excuse me. Um, so that's why I would go with Dutch Bros over Krispy Kreme because of their expansion plans. I think it's way more aggressive than Krispy Kreme. Um, do you think HD should have the market cap it does? I think I think the housing market that the Home Depot and Lowe's have been, and even Tractor Supply have been doing really good at. I think is slowing. I think is slowing down. Um, I think the new home builds are getting harder to do. Um, Remodels are getting harder to do, and I think that means a slowdown for the housing market and a slowdown for Home Depot, for Lowe's, for Tractor Supply. Just the top three in my mind there. So when we look at this pullback here for Home Depot, a high right here of 420. Put it there. Let's see how far it came down. Came down 28.6%, and now it's sitting. Where is it sitting? 36. And now it's down about 20% from its highs. Yeah, I think Home Depot, looking at its earnings here, look at this. We've got $35 billion here for the quarter for Home Depot, up 2.4%. EPS up 8/10%. I just don't. I don't think that it can go much further than this. I really do. I really think that this is kind of tapping out uh, for them. Now, people will still have to maintain their homes, so that's going to keep them moving. But the big growth that they have seen throughout all of 2020, 2021, and so forth, I think is done. I don't think we're going to see huge growth like we have seen for them over the past couple years, just because the housing market is definitely going to slow down. I mean, we go back here pre-COVID. This is where I like to compare things to pre-COVID and get a sense. I mean, look at where it was down here at 239, 240 at tops in November, October, September of 2019. So I'm gonna put a line here at 240 because that's about the top of the Bollinger Band there. 240 at 2019 or in 2019. So we can say, sure, they've had a burst. There are more homes out there now than there were in 2019, so they should be up some. Um, However, I think this area right here, which would probably be a bottom around, I'll call it 260, and a top at around $300. That's where I think Home Depot should be. I know that's a steep pullback from its all-time highs there most recently, but I think that's where it should be right now. If we look at the future of where the company is headed and what type of revenue it can bring in the future, sure, homes will continue to be built, homes will continue to be maintained, but the big remodeling projects, I think they're done for a while. People are going to be more thrifty and save their money instead of spending it so much. And just think, with interest rates going up, people won't be able to take out a loan against their home, equity line of credit or something like that, uh, because it's going to be more expensive. We don't have the interest rates near zero anymore. Mortgage rates, they topped 4% today for the first time in several years. So borrowing is becoming more expensive. So you're not going to see the big remodeling projects. People are just going to be saving their money until we get out of the rut we're in. So I think sub 300s, frankly, maybe that's too low, but I think that's where they should be right now. Um, let's see here. Do you think Best Buy will be around in the next 7 to 10 years? Oh, that's a fun question to think about. Best Buy. The pandemic definitely shift how we buy things. The pandemic definitely caused more people to buy things online, and it caused companies to beef up their online presence. It was almost like it was something that a company had planned to do maybe over the next 5 years, but they had to do it in a year or less. And I think that trend will continue. Now, I think there'll be a bit of a renaissance in that people want to get out to stores. People want to go to stores. And that'll last for a little while. It might last through summer. Uh, that when we do want to buy something, we're going to want to go someplace to do it, just to get out of the house. So I could see that kind of hurting online sales, but doing okay for box stores. Uh, but then after that, I think the trend of people ordering lines online will continue to go up. So Best Buy is going to have to transition itself. Um, and the one thing cool about Best Buy is the locations that it has. There is a possibility that it could use its locations instead of having, a big box retail store. Maybe it turns into a staging area for shipping packages to where they need to be. But I do think there's going to be a shift, and the trend is going to continue of people buying more and more and more online, and less going to physical stores to do that. So, in 5 to 10 years, I don't know if they'll still be around in the same way they are today. Um, could they go blockbuster and, just crash and burn because they fail to recognize the future? Or do they go through a transition and change in such a way that they're unrecognizable from where they are today? I think is a possibility, and it's upon management right now to do that. But I mean, look, lots of things over the past 3 days, the past 3 sessions have been on fire, right? Lots of things have been up and up big, but Best Buy, no, it hasn't. Today, it's not even 0.5%. Well, I guess you take after hours, it's 0.5%. Yesterday was down though, 0.2%. And the day before that, it was up 4.6. But Best Buy is just not it's just not going anywhere. And I think there are better places to put your money than Best Buy uh, when you're investing. So right now, I don't think that Best Buy is a place to invest. You won't get a great return on your money with that. Um, how do you guys compete with? How do these guys compete with Walmart and Amazon? I don't get it. Yeah, yeah. Well, one thing that Best Buy has that Amazon and Walmart don't is the Geek Squad. Um, so if you have and I think this is an area where Best Buy could do pretty well, because as our homes become and our businesses become more technical, We have more technology. That means we're going to need people to fix this technology, set the technology up, maintain the technology, and Best Buy Geek Squad. That is one path that Best Buy has that Walmart and Amazon do not. So I think that's something that Best Buy could really build upon and help it to transition to something a little bit different than what it is today. Uh, eBay, I, I I'm a fan of PayPal. Haven't really been a fan of eBay. I think it's got its purposes, but can it grow more than it has? Now, last quarter was pretty good. It has separated from PayPal completely now, so it's all on its own. Um, I just don't think that it can. I just don't think it's a place. I don't really know that much, honestly, about PayPal. I'm sorry, about eBay and where they're headed. But to me, I don't know. I don't know. They have so much competition, and they have a lot of low hanging fruit competition because all of these, big subdivisions, they have their own Facebook groups where they're basically eBaying within these Facebook groups, and they have these systems set up that people are using that instead of using eBay. So it's got a ton of competition because of that, and I just don't see it. Um, and maybe that's because I haven't researched eBay enough, but I just can't see it for eBay. True, never thought of that actually. All right, cool. I greatly appreciate the questions. Totally, absolutely. That's the whole reason why I go live every day. The market's open, so we can talk about whatever you want to. Um, FedEx had its earnings today, and just like predicted, cost caught up with it. Labor cost, transportation cost, uh, they were rough. The stock's down 2.9% in after hours. Let's see here. So they had a miss on EPS, $4.59 a share on EPS. What that missed by 6 cents there, 1.3%. They did have revenue of 23.6 billion, and I believe that was a 9 to 10% year-over-year gain, and it beat by 190 million there. But yeah, FedEx got beat hard by higher transportation costs, higher labor costs, higher fuel costs, etc. And that just hurt their bottom line there. But FedEx, that's a company that, as we continue our shift to digitalization and order more packages online, that's a company that can that's going to have the infrastructure to support all that. And FedEx and UPS, they have the infrastructure for shipping all these packages everywhere. And I know Amazon is building out its own infrastructure, but that's important. And the smaller shops online, they're going to need this transportation and infrastructure to get their packages where they need to be. So I like FedEx. I like UPS. Um, maybe a little. It's probably flip a coin. I might like UPS just a little bit more than FedEx, but I don't know. They're both pretty cool. Uh, all right. Well, that's all that I wanted to talk about. If you have anything else that you want to talk about, just go ahead and leave it in the comments. I'll give you a few minutes here if there's anything else you want to talk about. Otherwise, I'll wrap it up for the evening so I can work on some standalone videos for everyone out there. Uh, so, yeah. So, just remember tomorrow we've got 4470 on the S&P 500 as our target, and we are making higher lows right now on the S&P 500, and one more good day, about 1.6% away from our target right now, and we would get there. um, any idea why Taiwan market has been holding up so well when China and rest of Asia markets are so beaten down? Yeah, it's their independence. China cannot and does not control Taiwan. Um, it doesn't have that grip on Taiwan like China does with other companies that are in mainland China. So that's reason number one that I see. Even though yesterday or the day before, when we had the big rebound in a lot of China stocks, that was because China came out and basically said they would take a different approach. They wouldn't hinder these companies, they would let these companies grow. They took a completely different stance, changed their policy almost, 180. Um, and that helped to accelerate a lot of Chinese stocks like Alibaba. That was up huge yesterday, day before. I can't remember which day it was. Um, but that will help Chinese stocks going forward. The problem, though, that I see is that what's going to stop China from doing that again? Nothing. I mean, if they feel like these companies are gaining too much control, too much power, especially abroad, uh, China could just step right in again and just crush these companies. So I don't invest in Chinese companies. I do stay away from them. Um, so I don't have a lot of research on the individual companies, uh, but I do pay attention to what's happening because it can affect other things as well. And Taiwan is a big one, probably the biggest place where chips are made. So the West definitely has skin in the game when it comes to Taiwan and the chips that it produces. And that's why you see so many companies like Intel building fab places here in the States or in the United States uh, domestically. So they have it domestically. And if China does something, then maybe it won't affect domestically as bad when you have companies like Intel building their fab manufacturing places domestically. So yeah, not too much on Chinese stocks or Taiwan, but it's the political power that has the biggest sway with Taiwan and China and the different stocks of different companies in the different areas. Um, the West helps to protect Taiwan and those companies from the reach of China. So that's another reason why their stocks can perform better than companies in China and their stocks. Alibaba, it got hit bad. Uh, Even though it did have a big comeback, it's got a long ways to go before it can even reclaim some of the huge losses that it occurred. I mean, look at this is Alibaba right here. Here was its high back here on October of 2020, and let's see, it looks like it's somewhere around 319. $319. Yeah, I think 319. And it's now $99.15. The market rallied today, but it was down 4.3% and another 1.2% in after hours, so it's now sub $100 again. And see what happened, this big huge rally, right? 36%, 36.7%. Why was it down 5% today? Because people were taking profits from an unpredictable stock. China can come out, the Chinese government can come out and say something completely opposite of what it promised, going back here to the 15th or 16th, and just crush this stock even more. So it's a risky one because you don't know what the government's going to do. But those who got in here on the 14th or 15th and then sold this thing on the 16th, made a quick turnaround profit for sure. Okay. Any other questions? Let me know, or we'll wrap it up. Not a whole lot to say here about to add other than what I just said on the Chinese stocks in Taiwan and so forth. Don't dig deep on them, but just pay attention to the surface level information that's coming out about them. All right. So I guess we'll go ahead and wrap this up. I am here every day. The market is open at 5:30 p.m. Like to stay out here for about 45 minutes to an hour or so, whatever it takes to get your questions answered. If you could, click that like button. That is helpful. Also, sharing this video is helpful. And then third thing, if you like our perspective, consider joining us to beat this market with clicking the first link in the description or that first link in the live chat. All right. Well, I'll be back here tomorrow. So I thank everyone for joining me. And remember, the whole reason I do this live stream every day the market is open at 5:30 p.m. is to answer your questions. So join me any day. The market is open at 5:30 p.m. and I'll be glad to answer your questions to the best of my ability each and every time. Okay. Thank you, ladies and gentlemen, for being here, and I'll see you